I don't have my bio, so if I miss something, just ask me. But my name is Cragg. I'm 45 years old. I am married, and I have 4 children. And my children, they range from 10 years old, who's my daughter Kenzie, to my oldest daughter Aubrey, who's going to be 20 tomorrow. She'll be 20 years old. My favorite thing to do, guys, is to spend time with my kids in the sports that they like to play. I've been blessed in that my older girls, my oldest daughter, Aubrey, 20, and my 17-year-old daughter played fast pitch softball for many, many, many years. I had a lot of fun with them. And then we had a little gap there, and my wife and I had 2 smaller ones, and now they play soccer. So I get to go and travel all around because they're on travel leagues, and I have so much fun doing that. So that's my favorite hobby. I've been writing loans for nearly 20 years, and I was in the business when the market crashed, which was a scary time for everybody. I was in the business when the market was good, and I think I'm blessed that I have the ability to help folks achieve the dream of home ownership. And I'm pretty good at what I do. Why do I say that? I'm going to show you in about a minute. But that's who I am, and let me get into what it is I do. What I'm passing around to you guys today, or what Matt is a typical scenario, a little breakdown of somebody who might want to purchase a home for $150,000, okay? Now, all these figures you're going to see on this, they're pretty close. They're not exact because you can call lender A, B, or C. They're going to be close, but it may be a little off. But the whole idea here is the exercise to say, what does it cost to get into a house? Now, with that, for those of you that have ever purchased a home before, what is the biggest issue with buying a house or buying your first house? What would you guys say? I would agree, down payment. That's generally the biggest stumbling block. A lot of these folks that are renting apartments or renting houses can certainly afford the monthly payment, but it's just getting over that hump to get into the property. So let's run through this exercise for a minute and let's see what would it cost this individual to buy a house. Scenario is as follows, okay? Found a great house. It's $150,000, okay? It's priced right, and they want to get in with a minimum down payment. So generally speaking, they're going to go with something called like an FHA mortgage, whereas the down payment is only 3.5%. So it's 3.5% of the purchase price. Okay, we're going to begin with that. So that said, down payment on that is what? $5,200, I believe it is? Okay. You have closing costs. Now, the costs I'm going to go over are not just mortgage costs. They're all the costs. Okay, they're all the costs associated with the transaction. But you might start by having a home inspection, right? That would be the sensible thing to do. Hire a guy like Wayne. You would have a credit report pulled on you, an application fee, or excuse me, an appraisal fee, an underwriting fee depending on the lender, and some lenders charge you what's called a processing fee. You'll have a closing company, okay, a title company. In the state of Michigan, we use title companies, and they perform a couple of functions. They pull a title insurance policy on the property, and that's state regulated by the loan amount. They also close the transaction for you. You have recording fees with the county in which you're buying in. And in many instances, you have a realtor administration fee or a processing fee. Okay, and that can range anywhere from $150 to $500. So I'm generalizing here, but I'm getting you close. So when you add all those fees up for cost, it's about $3,000. Okay, but we're not done there. We're not done there. So you have something called an escrow account, right? Most of us know what that is. And that's where we actually fund our taxes 1 year in advance when we buy a house. So keeping it simple is figure out whatever the taxes are on the property you want to buy, and that's about what you're going to bring to closing. Okay? Now, we use a mathematical formula for this, but keeping it simple, that's how we're going to do it. So you have $3,000 in closing costs. You have your taxes for the first year, which are a couple $1,000s. On top of that, you have that down payment we just spoke about, right? Down payment of 3.5%, you can put more down, but a minimum down of 3.5%. You start adding all these up. I want you to look at the top right corner of the piece of paper that I gave you. How much is that to get in? You see where I circled the number? $10,720 to buy a house for $150,000. Therein lies the stumbling block for a great many people. Now, what's the answer? What are the solutions? Well, there's help out there. There's a lot of help out there. And most, or a great many, first-time home buyers are uninformed. Now, let me tell you this. I said first-time home buyers, right? Well, did you know if you've not owned a home in the most recent 3 years, you're once again considered a first-time home buyer? So you too would be eligible for something like this. So now, take this form and pass this around. This is what I go over, same scenario with these first-time home buyers, okay? Still, the costs are going to be $10,720, but we got to figure out how can we get you in and reduce that number to get in there. Well, I'll tell you how. There's something called a MSHDA loan, or MSHDA products, which stands for the Michigan State Housing Development Authority. They have down payment assistance that are available to first-time home buyers and repeat home buyers. Okay? You have they have county money, yeah, county money. So depending on the county in which you're buying in, and if the city participates, they have down payment assistance available for you too. Now, it's different from the state level money, and there's different qualifying criteria, and I'll tell you about that in a minute. But this same scenario I just passed out, that same $10,700 that was going to take you to get in, if we do this right, and we get you, say, $7,500 from the state of Michigan, $7,500, that reduces that $10,000 quite a bit, doesn't it? But we're not done there. We're not done there. We're going to work with a good realtor, a great realtor, and I know one's sitting right over there. And he's going to do his best to negotiate with the seller for something called seller concessions. That's where he asks the seller to pay some of your closing costs for you, okay? Because on these programs that I'm talking about, you really only need to contribute 1% into the transaction. It's 1% of the purchase price. Okay, so if everything works out properly, all the stars line up right, and Mr. Coquinos gets us a little bit of money from the seller, and in this scenario, Bill's only asking the seller to pay 1 3/4% towards your cost. He's not asking for a lot. If that works out, the money it takes you to get into the property is your $595 at closing, assuming you had already given a $1,000 earnest money deposit. Now that also includes your homeowner's insurance, guys. That's everything rolled in. So think about that. A buyer calls the mortgage company up and says, can you tell me what it's going to cost me to get into a property? ABC Mortgage Company runs through all those charges and says, it's going to cost you, Mr. and Mrs. Homebuyer, $10,720. Then they call me up. I'm licensed and I'm approved to offer these down payment programs. Okay? And if you're eligible, we just reduce that down to really $1,500, which is 1% for the purchase price. That's a fantastic opportunity for first-time home buyers. And let me tell you, I like the product, okay? And why I like it is, I would much rather see a home buyer keep a few months in reserves, okay, in case they were to fall on hard times, as opposed to liquidating everything they have and using that to get into the house. What happens if the furnace goes out? They have nothing to rely on, right? What happens if they're laid off for a couple of weeks? This happens. We're in Michigan. We've seen this time and time again. So this does not make the loan any riskier whatsoever. And in my mind, my opinion, it strengthens the loan. If I can keep $7,000 in your bank account versus you putting that down on your mortgage, it's a good deal for you as a home buyer. Now, what kind of difference does that make on my payment? Putting $7,000 extra down on my mortgage versus not putting it down. Depending on the interest rate, it's only about $28, $35. It's not a big difference. So that's a great program. That's for your first-time home buyers and for previous homeowners that have not owned a home in the most recent 3 years. So similar to this, what if you do own a home and I sold it this morning? Okay, I closed on it. Is there a program for me? Yes, there is. There's a My Next Home program, which is available here in the state of Michigan as well. Now, this program is very similar to the one I just talked about. However, that's where the state will lend you or give you up to 4% of your purchase price with a maximum of $7,500 to use towards your down payment. Now, who might benefit from that program? If you think about it, maybe someone who's recently divorced, right? We're getting divorced and I have a spouse exiting the home. Maybe there's no equity division there. How am I going to get into a home? Well, this is a great program for that person, isn't it? What about somebody that may have lost their home during the mortgage market meltdown, right? We all know a lot of people that happened to. And these people are reemerging back into the market. Why would they not be taking advantage of such products like this? Do we all agree that it's a great product for them? Absolutely. Okay? But we're not done there. Okay? Those are down payment programs. Now, what about this? What if we could get you an additional tax credit? Something called the Mortgage Credit Certificate. Now, I've presented this in the past. In short, that's a tax credit that will give you, the home buyer, up to 20% of your mortgage interest paid each and every year for the life of the loan. So think about that for a minute. I pay interest on my mortgage. I pay $6,000 in interest a year. I get 20% of that back from the state of Michigan as a tax credit for the life of the loan. That's free money. Now, why doesn't everybody offer this? Well, a lot of them can't offer it. They're not approved through the state to do it. A broker can't offer it. A lot of loan officers, they may not be familiar with the product. But my point is, there are some great loan officers out there. You or your friends, your family members, should be asking about these products. We've all fallen victim of you don't know what you don't know, right? And for 20 years I've been writing mortgages, and guess what? I've written thousands. But for 15 years I never offered these products because I didn't have them at my disposal. Good loan officer, I just didn't have the product. So you would have been better suited, possibly, if you needed this, to sit with somebody that may have been able to offer that. Would you agree? No, we can't offer that now, though, and we're really changing the lives of a lot of people. So, something else I want to tell you. You always hear me stand up and say, I've been writing loans for, 20 years, and you're probably thinking, well, what does that have to do with anything? It has an awful lot to do with something. I've touched a lot of paper, and I've seen a lot of scenarios, and I know how to make something work. But here's an email I just picked up on the way in here. And a lady said to me, she says, Sean, you've been awesome, and the other agent knows you, the realtor that is. And I think that's a big part of why we got this home accepted. The other offers were conventional, and mine was FHA, but your name came across strong. So that's a good thing. That means I've been writing for many years, thousands of loans. We are going to close this loan. If we take the loan, we're going to work hand in hand with you. We are going to address the issues because I promise you there's probably going to be some. I always give the analogy or the scenario like this. Have you ever taken a flight like that, the red eye to Las Vegas? If anyone's ever done that, okay? Sometimes you're sitting in your chair, it gets a little bumpy, right? Called turbulence. Well, we're talking about the mortgage industry. Sometimes there's turbulence. Now, just like that pilot's going to land that plane, I'm going to land this deal for you at the closing table at the terms you wanted, if not better, and at the cost we talked about. So rest assured that you are safe with me when it comes to mortgages.